Hey guys, it's Houston Trong from thetradingedge.org, and I'm calling this video Go Long and Stay Long. So the markets are doing their best to basically stop you out before the real move happens. So let's talk about the markets really quickly here, and this is going to be a quick discourse and a bit of color around what's happened the past couple of days, because this is what the market's really good at doing, right? It confuses people and causes them to lose focus of the long-term trends and get caught up in the shorter-term trends. And that is what causes most people to miss the real moves. So if you watched our weekly videos and you know that my bias has been up. I'll just quickly cover the cues. I'm not going to go every single instrument here, but just to get the idea. Okay, so on the really wide time frame chart on the bottom right-hand corner down here, right? So we have a 3-month chart at the bottom right hand corner. So we have an outside quarter here going down, inside quarter, last quarter, and now it's inside and up on the 3-month chart, right? So your bias is up on the quarterly chart. On the monthly chart, right, we've had nothing but green months since January, and this month is nowhere near turning red. Week starts off green, and in order for this thing to be a bigger reversal, we'd have to take out last week's low. So right now, the bias is completely up on the wider time frames. On the daily chart this morning, we gapped lower. So we gapped down slightly, not even that much, maybe about a 0.25% at most on the Qs. But that was enough to take out all the late comers who got long last Friday. And this is where it gets interesting. So this is why trade location is so important. So if we take a look here at the 4-hour chart, and I'm going to zoom into the chart now in the top left-hand corner. What we'll see here is that going back a few days, last week, right? So we broke above this broadening formation. So you'll see, I'll zoom out for a second. We broke above that broadening formation. We cleared above this green line that caused the quarter to go inside quarter and up. So now in the situation, now it's inside quarter and up. So then on Wednesday, we had a situation where it went outside bar to the downside, red bar, then it went inside bar. And I was really hoping, sitting right on this level of support. This was previously resistance, and now it became support. I was really hoping that, for a nice accumulation level to be able to buy it right here, right? So right at the break of this inside bar here, without it gapping up. So the ideal situation would be had the market opened up right inside the range here, or even lower, had the market opened up in those levels and then come back up again, then you would have seen an example of the buyers showing strength by buying in the pocket or in the hole and then pushing it all the way up to these levels. Instead, what happened on Friday was we had that gap up, right? So that definitely shows confidence, but it also shows exuberance. So now you have a gap up here now, and anyone who bought the gap up on Friday, either bought that bar or somewhere inside these levels, they have bad trade location, right? It's poor trade location because what are you long against, right? So had you gotten long here or on this bar, this is the 4-hour chart, right? Well, look what happened today. On Monday, it gaps here, opens right there, and then proceeds to go all the way down to here, to 183.63. So stopped you out here. If you put your stop there, it stops you out, and it came right back to the entry here again. This entry here is 89, 183.89. Again, the low here is 63, right? So it came right back a little below the folks, to the entry there. So anyone who even trailed the break even here, had they bought that inside bar, got stopped out before the move, went back up again. And this is what happens all the time, which is why you don't want to be chasing price, because this is what happens. Because essentially what's actually happening here is it's creating a broadening formation. We're getting higher highs here, and then you're having lower lows. So it looks something like this, right? So if I draw that in here, right? So you get a higher high here, and that's higher than that low there, correct? Now you have this low here, which is lower than that low there. So now if I zoom in to something like a lower time frame chart, like the 1-hour chart, you'll see how it's moving around, right? So it's creating these higher highs and lower lows, which is really confusing a bunch of people. But basically, this is price discovery. This is the way it looks like when you see it in that fashion. So now the markets are going back to highs again and pushing things back up. So ideally, had the bull, we obviously don't get a chance to choose how the market opens and where it trades, but we do get to choose how we're going to act around those levels. So for me personally, if I'm going to get long in these areas, I'm going to be long a lot smaller, or I'm going to play a lot tighter because I know this is possible, right? Because I know that it's stretched here, and it will not take much for it to come back down and stop me out. So this is a way better entry down here. So you could have waited here and got long again at these levels and waited for it to come back up again because the trend is higher, right? The trend is pointing up. So that, that's a very, very brief kind of peek into what a broadening formation looks like. And I think it's just useful to understand those two principles. This idea of not chasing price and waiting for a good trade location, and the idea that this is something you want to be watching out for is, what are the bulls doing? Are they just simply smashing prices higher? If that's the case, you can expect a pullback, right? Or are we buying in the pocket when things are a bit lower in the range and then showing strength all the way through? Because when you have that type of outcome, then it shows that the buyers have conviction because they're buying in the pocket, right? And these are stronger longs. These are the longs who have more staying power versus the guys who are simply trying to buy tops and buy breakouts. If that thing fails, they're going to be out right away. And those are not the kind of longs you want to support a longer, stronger rally. You want to be finding longs who are buying in the pocket here, in these pockets down here, because those guys are going to have better trade location and they're going to be able to support the rally going forward. All right, so I hope that helps. As the markets move back up here again, look at this. 184.92, the high here, 184.94. So there you go. There's your higher high. It just took out that high there. All right. So hope this video helps you. Any questions? You know where to find me. Happy trading.